Welcome back to Trading 360. I'm Nicole Petalides. It's time for the big three. 3 stocks, 3 charts, 3 trades. Ben Lichtenstein will take us through the charts. Here to take us through the trades, Alan Nuckman, Chief Market Strategist, BullseyeOption.com. All right. Thank you both for being here. Alan, I know you do strategy, but, what's creeping in your mind when it comes to what's going on in these markets? Anything in particular you're watching or fascinated with?
Enjoying this holiday upcoming, and I'm enjoying this first 6 months of the year. It's been an amazing snapback attack in stocks, and I liked your last guest that had some optimism. I've been looking through that prism for a long, long time here, and it's nice to see. The stock market have this big bounce, and this momentum's very strong. And I'm gonna throw something to Ben here. With the holiday, the flags are flying. Not just the 4th of July flags, not just the American flag. The flag in the S&P here, this flag pattern that we've seen over the last 2 weeks since those highs 2 Fridays ago, that target's 4,700. The all-time high is 4,800. So we're within striking distance of that. And if we have a full V recovery, the S&P targets 6,000 from the distance of the sell-off on top of those old highs. So there's a lot to talk about. It's happened every single time in history so far.
Wow. Ben, when it's your turn, you feel free to jump in on that. But I'll start with what we have planned here. And Transocean is the first name you're focusing on. Of course, energy had been pulling back. We had a drawdown. Energy is starting to pop back a little bit. Back-to-back gains yesterday, today. What are you looking at when it comes to Transocean rig?
I love the risk reward here. It's been trading sideways between 5 and 8 for all 2023. 650 right here is the midpoint pivot. So if it can pop above the 650 of the sideways range, then it should get to that 8 level. And then if it can break out of that overall range, then that target's 11. So I see leverage buying. I see a lot of positives here, and I like the fact that the dollar is making an attempt to the downside here. The way to play, the January $5 call, it's trading for about $2. January option's only $25 more expensive than the November. Gives me plenty of time, 7 months. And at $9, a very modest objective, this option gains 100%.
All right. Ben, you'll have plenty to discuss here. You have the big picture. You have the Transocean chart. 1, 2, 3, go, Ben.
Nicole, Alan pointed out the flags are flying, and he was talking about the S&Ps, which I'd agree with. This has been quite the rally, to say the least. But rig has a flag flying as well. Transocean, though, to his point, has been somewhat limited as far as really well-defined trend one way or the other on the more intraday time frame. So let's just begin with the range-bound price activity Alan was describing. He was talking about a pivotal area around 650. I'd have to agree with that. It's right in the middle of the range that we've established here. We're going back to the beginning of April. You've got the lower extreme around 540, that upper extreme around 720. Not a lot of conviction one way or the other. You can see, again, just overlapping rotational price activity in that pivot area, again, around 650. So let's take a step back and bring a little more time into this chart. In this instance, similar pattern playing out. We're going to the end of February when we were up around 774, beginning of March. Again, bottoming out around 540. So similar pattern, 650 significant here, maybe 660. What's a dime amongst friends here? But let's take another step back. Again, when in doubt, zoom out. In this instance, I'm giving the benefit of the doubt to the bears here because we just recently topped out. Here's that flag I mentioned, which is flying the upper extreme. Visited that high that we saw back in October, the fall, end of 2019, beginning of 2020, and it failed, you can see. So it opens up a door for a retest of the lower extreme. I feel like if we break down below, again, that 650 level pivotal in terms of this range, which we're holding below, break down below 4, opens up a door for a retest of those October 2020 lows. I see what Alan's talking about in terms of some of the strength off this lower level, but I also see a key area of resistance that we're running into right now, and we've struggled to get above it. So again, the flag, I think it's important to keep an eye on whether you're talking the broader market or this individual stock, but you also have to keep an eye on some of that resistance we've seen in the past, and that's where we struggled, that's where we failed.
Yeah, and Alan, are you watching that resistance level closely as well?
Yeah, I'm looking for it to break above the 650 and get running. But I mean, this option, $1.50 in the money, it's got 7 months of time. So it's like being long from 5. It's, again, the way that I play. It's as much the strategy as it is the stock. Now, this stock does not have the overall uptrend like you see in the S&P. And I know Ben didn't touch the S&P 6,000. I'm not saying that that's happening tomorrow, but in the longer term, there could be some strong momentum in the markets if these other stocks starts to play ball. So from risk reward, I like some of these laggards to develop. And again, I'll look to see how it reacts if it gets up to that resistance level. But again, it's a limited risk in the money option, and a small move really pays off. And like I said, just had moved to $9, this option gains 100%.
Right, understood. Okay, let's get to the next one and get to Catalan, which is trading at 41.65 today, Alan.
Yeah, it starts sitting here where we're on the 42 level. It's been between 30 and 50, making a bottom base for 3 months now. Now, breakout of the range target 70, but the way that it's made this bottom has been very impressive. It's 50% off the September highs right now as it stands. Now, that May low just a few weeks ago, we saw bullish divergence, and I've talked about that over and over and over again, and so hopefully I have a little bit of credibility with what we've seen in 2023 of all the stocks that we've seen this bullish divergence bottom, meaning they made new lows but not new highs in implied volatility. That's the sign of the sentiment shift. I'm also seeing leverage buying, which is options long accumulation. So somebody has an intelligent opinion, let's say. The way to play here is the October 35 call. It's trading for about $9.50. It's got 3 months of time. It's $7 in the money. And let's remember, this stock was at 70 just in April. So, it's got a lot of pent-up energy and a lot of gaps up above that could get this rocking and rolling.
All right. Rocking and rolling is the possibility here. Bullish direction. CTLT, Ben?
Well, I agree with that sentiment in terms of a bit of a shift on the more intraday, more intermediate time frames, but this just put us again right back into an area of resistance on the bigger picture and a downtrend. Let's just start with the move up we've seen after a couple earnings reports. Basically since, well, you can see the last couple reports have provided quite the catalyst here. As I notice, again, from 28 up to 45, you can see as we work our way higher, a couple areas of consolidation that form. We're looking at 30-minute candles. I've got 37, 44. Notice how the pullback that we just recently saw honored that recent lower level support around that 37 area. So, yeah, in this instance, we're seeing some momentum, to the upside, a bit of a trend higher. But look at what's going on the more intermediate time frame. Let's get back to this 4-hour chart. You can see trend environment to the downside. Recent test of that 45, 46 area. Failed to take out 47, which was a big level. And then also as we step away from the 4-hour candles, look at the daily time frame. We're going all the way back to the highs that we saw up around 142. The fall of 2021 into that weakness, that sell-off that we saw into the beginning of the year actually went sideways around 100, consolidated, broke down again. I like what Alan's talking about in terms of the recent run-up here, but until we get above 58 right now, this is still in a trend environment to the downside. This just could be another sell opportunity.
And you're watching that, right, Alan? I mean, you see this downshift.
I'm all about psychology. Insert your jokes here, Ben. But what I saw was it's very important that we tested the lows and we rejected the lows with earnings. And since that day, it's been positive. So that's a sentiment shift, a psychological shift. The market's been positive. Between 30 and 50, 40 is this important level to keep an eye on here. Let's see. But if we just get back to the 50 level, this option gains more than 50%. So there's a lot more upside potential than downside, in my opinion, with the macro market, getting some legs.
Okay. And that brings us to Cleveland Cliffs. And if you're going to put that same psychology there.
Yeah, dollar down. The dollar down idea here, we've been between 100 and 105 for 6 months. We're here around the 102.5 level. Let's see if it can test 100. I'm up on Lake Superior. And so right over my shoulder is the water, and the ore boats keep coming by. And iron ore is the product of Cleveland Cliffs. So this is well known. This is my hometown stock. The dollar down, the stock's trading about 16.75. It's been between 12.50 and 22.50 for the year. So that 17.50 is an important midpoint. That's also the 200-day moving average. I'm positioning to see if it can pop above that. If it does, it's going to get rolling. Again, I'm seeing that leverage buying, so the intelligent accumulation. The option I'm looking to play is the October 15 call, trading for about 275. If we break out of this, if we get back above the 1750, that's the midpoint of the range, then we'll often get up to the top end of the range. So we'll look to see where we can go. If we get to 2250, the October 15 call, which has 3 months of time at a 75 delta, that'll gain about 175%.
Look, I mean, do you see a path there, Ben, for that bullish call?
Nicole, I do on the more intermediate time frame, but this is another perfect example where I think that we're seeing a bit of a relief rally here, but running into resistance right now. You still have to give the benefit of the doubt to the bears because that longer-term trend remains intact. Let's begin, first and foremost, with the rally that Alan's referring to in terms of the run-up we've seen to 17, and you can see a little bit of consolidation that's been forming since. High conviction on the left side of your screen, sideways consolidation around, well, let's take a look here and map out a couple of the areas that the market paused and stalled at. 1640, you can see 4 or 5 of them on the left side of your screen. Very short-lived, very limited, and tightly knit areas of consolidation. But again, the trend here, the sideways consolidation, but this is hourly candles. Let's not get too dialed in on this because as you step back, you're going to see a different pattern playing out and how this recent run-up that we just looked at brings us back to the highs that we saw back in the end of April. We're talking middle of June here, kind of just retesting this level. And yeah, we're above the pivot here, which is 16 at this point, but we still have yet to take out that $18 level. That's the middle of the range that we established prior to the one that we're currently forming. So that's the area, again, that would invalidate the working assumption that value is moving at lower and lower levels. Until we take out 18, the assumption is that we'll see a vertical move to the downside and form something below this area that we saw consolidating around 16. Let's step another foot back, and you can see as we looked at the highs up around 34 that this has been anything but superior for the longs for investors. And again, this 16 area is significant. You can see going back to May, June of last year. So we're in a pivotal area here right now, but I'm just looking at this longer term trend right now, and I give the benefit of the doubt to the bulls. I like what Alan's talking about on the more intermediate time frame, but still unable to invalidate this longer term trend lower.
All right. Thank you so much. Good to see you. Ben Lichtenstein, Alan Nuckman, final thoughts.
Well, I want to correct myself. Number one, they're not ships. They're not ore ships. They're ore boats because ships are on the sea. Boats are on the lakes. So I'm going to throw that out there. But I want Ben to finish up. We're at the halfway point for the year. I know they have a show somewhere called the Halftime Report. This is the halftime for the year of the S&P chart because optimism wins, my friend. And right now we're in a nice overall trend. Now, not a lot of stocks are participating. You are correct. Let's look to see if these laggards can play some catch up. I like the risk reward because I love this 2023 momentum.
All right. Well, we're going to do this next week and the week after that, and we'll continue this conversation. Thank you both so much. Alan Nuckman of BullseyeOption.com. Thank you so much. And of course, Ben Lichtenstein. Coming up, time to spotlight the drug makers developing treatments for weight loss. Eli Lilly, Pfizer, right? They all have entrance into this space. More Trading 360. We'll be